Let's do it. Good morning. Well, this week, the script is playing out from the letter weekend. Sometimes we get it right. Um, Things are accelerating here, and end of the month, beginning of the month, bullish period. The momentum picked up last week. It's continuing. Yesterday, the Russell 2000 kicked it into gear after myself and maybe a couple of others in the room got caught in a little shakeout right before, but we got right back into it, and it just exploded. There, I was kind of laughing there at the end of the day where I was texting. I lifted my head and I'm like, "Whoa!" The thing just blasted off there, and so anyway, it's looking good. We'll see how long it all lasts. I guess hopefully until the end of the week. Maybe a gap up on Friday, a gap and a crap. And so we'll see if we can get the Russell up to the old highs. I suspect the transports should make new all-time highs, and the bullish glee will overflow before the pain comes, as it's supposed to do. Historically, that's what it does. So, looking at the futures, uh, day before yesterday, we had the red bar, and we said, oh, maybe it's going to pull back. Would make sense. A little, far from support here, unfilled gap down there, and the rising 20 a little far away, and but nope. It started lower and it regained its momentum and up it went, and it's continuing this morning, and there's nothing to stop it except the next maybe wave of let's take our money off the table. So we'll see where that goes. So let's just take this line here. It's not a pivot, but since we've got a range expansion bar, so a lot of times conversation in the green room comes up about, I get the pivot thing in the management, but I'm not sure when to raise my stop loss. Well, you have to have something that jumps out as, I like to call it, an event. It catches your eye. So obviously that's not like a narrow range bar, but when you get a red bar ignored and then a range expansion bar, which is a signal of buyers taking back control, right? Maybe you could say, okay, they lost control for a moment. They took a little nap on the red bar, and then it's like, let's get back in there, guys. And they drive it back up, and you're taking out that high. So clearly, this is not a place that we want to see prices break under, because now that would be what we call a breakout failure, right? Or could be like a bearish 180. If today's bar was to then close down below that bar, we'd know something was wrong, and the indication would be that it's going to pull back, and the bullishness at this point in time, for whatever reason, you know, party's over for the moment. So right now things look great up here. Major supports down here. We've got a little minor support level right here because of these three bars in the range expansion bar. It should not violate that bar. So Qs, as this range expansion bar happened, and it's like, okay, it's going up, range expansion, maybe it's going to stall. Yes, absolutely, it stalled for 2 days. Up again, range expanded yesterday, and it's still going. Where's it going to stop? No idea. I guess you got to go to one of those services where they get a protractor out and some Ichikumi clouds and Fibonacci extensions and an Elliott wave, and there's probably a target up there somewhere around where Mars comes around Venus and revolves around some number up there. Anyway, we'll just stick to bar by bar analysis and see if it even breaks a prior day's low at some point. So Yesterday's low is there. It's a range expansion bar. As you know, that creates a void. Within the void are consolidations like this, which is not that powerful a reference point, which could be violated and still not damage the trend. But by no means do we want to see prices come down under that bar's low. Very good, Trader McGraw. Oliver Ritchie says, why the VIX doesn't want to drop despite the crazy moves to the upside? Well, the volatility index measures anticipated volatility. So clearly, there's an anticipation of volatility coming. And with range expansion bars comes an increase in volatility, an increase in range. So I guess it's in part normal. I wouldn't worry about it, tell you the truth. You know, take note of what's happening, that there's something different going on here. It's one of the things that maybe it's like, this is something that could be a heads up, but you know what? Right now the market's going up. And unless it retraces deep into a prior bar's range or closes down below a prior bar's low, just keep that in the back of your mind. It's not a reason to act yet. Right? So, look, we look at market internals, we look at intermarket analysis. These things guide us as to the possibilities of what's going to happen. But until it actually happens, there's nothing to do. Right? We don't trade market internals. Right? We could trade the VIX with a, VXX or UVXY at an appropriate time. But the information that's providing that says, this is odd. I'm not sure what to make of that exactly, but it's not a reason to do anything. So Russell, it had that, it started the day down and it went up and there was that jiggle yesterday, exactly where it was. Looked pretty potent at the time. Anyways, I'm looking at it and let's scroll back here maybe. I know when we saw it, maybe it was here. I don't know. Anyway, there was this whipsaw that happened and then it came back up again and we all plowed back in. And so this thing's really got to play catch up now. And, that big red bar followed by yesterday's reversal, I'm telling you, if prices go down here, the party is really over, because here we have an event. We've got a range expansion red bar with a topping tail, and now we've got a range expansion bottoming tail bar that's green. And it's within this consolidation, within an uptrend. It's at resistance where we've had this tail and a little tail, and then a bigger tail as it tried to break higher, and then down again, and buyers, which kind of wimped out on this day, it's a few points lower. Let's get back in and see what happens. And so here it is jiggling around here. So this thing has got to clear this and it should just really take off, And of course, we'll keep an eye on XBI and XRE to see those ETFs, OIH, oil and so on, see if they're kicking it in. And if they do, I'm hoping to see this thing make a monster move. Yeah, I know, Alex, it's messy. It's been messy. But look, we'll sit there and wait like we did yesterday, right? Waiting, and we'll see what jiggles occur, and we'll know when it's time to jump in there. And so, that's what we do. All right, bonds down here a bit. They're sitting on some support over there, that pivot, so jiggling around. We went over yesterday, interest rates are going up. That's a good thing. Oil just continues to be in the ICU coma ward there. Nothing to do. Gold, continuing to repair the damage of this bar. It popped up yesterday and came back in. So now, what I mentioned yesterday, I'm kind of conflicted with this because the charts are conflicted, right? So I like to say, if I'm confused, the charts are confused because I'm just reading the chart. Right? So what I'm conflicted about here is this pattern is shaping up. It's not in shape completely yet. So I don't know what it's going to develop here. But this weekly chart, historically, and I've got this library of charts in my brain that what things are supposed to look like based on what they look like now. Right? So this weekly chart is, I hear you, Kalish, I'll get to the SPX. Calm down, you guys in YouTube. Right? So this chart typically would come down here, right? Make a lower high, lower low. And that is where the buyers would come in and you'd get a big move, which would mean maybe it's got to come down here and retest. I just don't know. So that's why I say conflicted, because this is now creating a trading range. So I think it just needs a little bit more trading time, maybe into next week, to see what develops here, whether this really wants to go down and I'll tell you, a poke under this low that's immediately reversed could be a very attractive setup. But we'll see. We'll get to it. Right now, it's neutral. Silver been doing better, but you could see what happened yesterday. Jumped up near the high, and it's coming back in here. And this looks like it needs a little bit more of a rest, even if it's just sideways. So again, as you know, we'll be keeping an eye on that. And our transports, they are knocking on the door to take out 200 with some authority. We got a nice green bar yesterday. So we just want to see, of course, that it could follow through. And do not want to see it close below yesterday's low. Common sense. Right? What we do here at Master Trader is common sense. Most of you that are new at this, you're confused as hell because you didn't get here first, right? You went on the internet, somebody marketing the red light, green light, or the indicator-based methodology, and after you kind of got slapped around using the Holy Grail methods there, finding all the confusion, you found your way here, and it's all good. So, simple common sense strategies. SPX. I would be respectful of the call side and not, unless you get some nasty reversal, I would be stay away from it. And you know what? As this is going up, as I said before, right, in no way should this go below yesterday's low. That's going to be bearish, which leads to put spreads down below this area would be what you want to be considering. Now, that thought in mind, where this has made this move up, there's always risk with no matter what we do. And our job as chart readers is to assess the risk, right? So while this looks like a no-brainer that it's going to keep going up, if by chance this was to fail, it'll probably fail badly because of the increase in the momentum, this sideways price action prior to yesterday going higher. So if you sell a put spread, and let's say it's down here at 34.40, which is pretty far away. I don't know if there's premium there, but if this should start to break, I don't want to copy that. I would run like hell. Right? So there's the area. Right? that area here, if this should start to break, prices break below that, just get out. Because that's going to, there's going to be nothing to stop it from going down. And this chart communicates to us that the majorities have got their money on this continuing to go higher. Right? That's what the charts say. So if that fails, people are going to start hitting the bid. And they're going to hit the bid because this is not, it'll be a shock. That's what we call a shock pattern. That's not what's supposed to happen. So be careful on that. And the call side, I don't know, just pick some spot. Go and look at the trade table and go and pick some spot. Like you're looking at like this kind of a range, this big days range, and just put it on top of that bar and get as far enough away on the call side from the top of that bar, wherever it puts it, above that bar. If you guys get what I'm saying here, take the range of this bar, right? Add it to yesterday's high, wherever that puts you, and then look at this trade table and see where there's premium even further away from that. And that'll give you the area above that should be out of the danger zone. All yours, Dan.
Do you know anything about the danger zone?
Oh, yeah, I've been there, and it is not pleasant. And by the way, last Friday's danger zone was a sweater.
Yeah.
And, kind of got lucky with that one, tell you the truth, by a fingernail. You got to be careful with these SPX things. Everybody, if you are not experienced with this, you got a smaller account, I'm just telling you, don't go and play with something that will tear your head off.
That's why I don't give them.
Yeah. Well,
I mean, we do them in the green room, but for our, you remember the problem with Workday yesterday, and that's exhibit A of why I refuse to give them to our folks. I'd rather just use the SPY when there's good juice.
Victor asked me about internals, Sam. I know that it's getting late here, but look, sentiment is, it's on its way to Jupiter. So we know that's bearish. Breath is so bad, it's still under zero. And all of that tells us that there's danger out there, which, like, we didn't know it the way this market's going up. We all know that. But the idea here going into this week was that the Russell and the dogs are going to catch up, and breath would get to a bearish level and we'd get a sell signal. But so far, breath is still weak. So I'll update you as soon as there's something to say of importance.
So this DT, the reason I'm looking at it is somebody actually put on our Facebook group yesterday, said, hey, was DT a good setup? And I said, oh my gosh, yes, it was. This is a bullish 1, 2, 3, 4. This bar actually you could have held because it has a closing new high. Gapped up yesterday. You could have bought a 5-minute high. Beautiful, beautiful setup right there. Absolutely. All right, all our opens are fine. We're still very heavily long, so even though it's a head scratcher, this rally to me, we're nevertheless technical traders, and we're participating in it. Shell, I saw this one late yesterday in the afternoon, and so we sold a put spread way out of the money, and we're already up 50% in just an afternoon run. In retrospect, you just got to hit the mouse, and you got the position size for it because it ripped into the close. So I just texted, we're going to cover half our put spread 5-minute low. All right, but all our opens are fine. Just ask me if you have an individual question. XLI, yeah, looks fine, Parham. HON. Now, see, we had a long talk about this yesterday in the green room, the last hour of the day, about look, the market's overbought, we're getting on board a moving train, so on and so forth. And somebody mentioned CMG, and I said, yes, it looks higher. It looks higher, but that one's further away from support. So if we do give new trades, so like this XLI, I would only feel comfortable on new trades if it's something like this, that it's a bullish setup closer to support. In this one would be red bar ignored. You know, it's a bullish gap breakout. I still got a price void daily, weekly. So that we spent a lot of time talking about that yesterday. Honeywell, I like XLI better, you know, just because this one's getting a little bit more extended. And today at MT Live, we're going to be talking about trends and trend quality. So that's going to be another great one. Yeah, NVIDIA's in my gap list. You know what, Greg, I was thinking on NVIDIA, we actually had this core long, right? Well, I mean, we had a core long down here at 200 bucks, and we rode it up to 250, and then we held it through earnings, and it was this gap down right there. We gave it a 30-minute low, and it stopped us out. I remember we're like, hey, this is a beautiful core chart. We're going to give it room. So we could have sat through and got more out of there. And then, wow. So well, this was the Corona scare, you know. But yeah, that NVIDIA's been on a tear for sure. Jason, here, let me, Jason right here's down over here. It's before you scroll up. So yeah, AutoNation. So here's another one. It would be a breakout, but it's closer to support. So yes, that's a definite candidate. AMD is a 1, 2, 3 with semis strong. Look at semis. Semis, that was a beautiful 15-minute chart. And I said that into the close. And I also said spiders look beautiful. I said, yes, we're extended, but look at the afternoon breakout from a beautiful 15. I gave the green light on a lot of longs yesterday. I wasn't as aggressive of officially giving them to our subscribers just because we're already loaded up with almost 30 longs. FX, yeah, looks good. Bullish 3-day consolidation. You still got a price for it, maybe up to 1450. P-Tong, Jake, Jake, I'm gonna have to make a little F9 recording for you that says, what do you want me to do with that? So that's gapping up $8. So can you tell me what, I have no idea what you're thinking. But if you're thinking long, it is a bullish pre-market base, I give you that, but it is not in my wheelhouse. My wheelhouse is this gap up day where we did sell a put spread and we covered it for a dime the following day. But the following day was also a new entry. That was a bullish gap to all-time highs. So now it going from 70 and gapping up to 92, it's not my wheelhouse. But that does not mean that it won't rock here for $5 as a day trade. But I definitely wouldn't be doing it at the open. I'd put it in a thumbnail like we always do and see what it does. Let's see, YouTube. Junction leasing. No, Junction leasing is telling me I didn't put anything on Telegram. I did to the advisory swing letter, Junction. And the reason it didn't go to the weekly is because the weekly is 10 days or less, and this one did not have weeklies, so it was 17 DTE. They're asking about IBB short. That's the BIOS. There's no price void. It is a 180 reversal, but it's a 180 reversal right back to support. So that is not a good candidate. William CRM long. Maybe as a day trade, you know, I actually said yesterday or the last 2 days that this bullish gap up and bullish consolidation looked like a resting to go higher. So maybe 15-minute high, it sure does look higher. I would wait and see what the broader markets are doing because we like trading with you know, tailwinds at our back. And the tailwind is the broader market, and we're gapping up here and we're coming in pre-market right now, breaking pre-market support. So for me, unless something is totally on its own page, there's no new longs for me, and we don't trade in the first 5 minutes anyway. Alex guess Facebook. It looks great. I like the gap up over this pivot. I like it going sideways. I like relative strength. The only thing I don't like is it's in the first 5 minutes, and I don't like the market falling. But it's a definite candidate. And risk and reward go hand in hand. So I might miss the trade, and you might make a couple bucks here in a couple minutes. But that has, you know, it's your trading plan, your wheelhouse. But it's a great setup. William, I already mentioned MU. No, I didn't mention MU. I just mentioned AMD.
Arrow and Juniper. Juniper repairing the damage, but Arrow's looking pretty good.
Yeah. So MU, I do like the gap over this with a price void. So maybe 15-minute high, William. I'm doing nothing long with the market coming in. Greg, your Twitter, I had it here from yesterday. It's gapping over consolidation.
Send me messages.
All right, there's shill. Let's cover half at 55. All right, out 55. But yeah, Twitter looks good. William, Microsoft, not bad. It's a buy setup, but we mentioned yesterday, I would like it better if there were more, if the reversal happened on support. Market coming in, so I'm still doing nothing. But Twitter is a tier 1 setup here again. See how Facebook got slammed right back down? That's the reason I don't trade. Look, oh, Macy's is on my list. I didn't get through all my gappers. Macy's had earnings, gap up, had a, you know, fairly bullish pre-market, big old price void. This could be an all-time low. Who the heck knows? I don't.